Hello, investing friends. Welcome into Big Investors Club, Big Dividends Edition, Tuesdays at 2. Great to see you. Thanks for being here. Got a great show for you. Got a great stock to feature for you today. It's dividends growing from trees. Yes, dividends growing in tree orchards. Are they orchards of trees? I guess they're orchards of trees. Acadian timber, timberland. This is hardwood and softwood trees, and it grows from the trees. And so it's all a great business. It's a terrific business of growing trees, of course. And then we know how much demand there is for lumber and materials and things like this. But then this has an ESG kicker. It's got a big carbon credits kicker, and we could have a fourth quarter catalyst with that coming up as well. Very cool stock. It's yielding 8%. Can you believe that? Very cool stock. This is the time to get in this stock. This stock is, we've been looking at some of our stocks that have been doing well. We're going to check out EIG, which is at an all-time high. Just paid a second special dividend this year. That one's been kicking butt. Acadia, this could be the time to get into this one. This one has been beaten down. The timber was flying high, and then mortgage rates went high. Mortgage rates went higher, and housing prices went higher. So it's basically twice as expensive to buy a house now with your mortgage payments. So the housing market cooled off. Timber prices cooled off. Could be a good time. We'll check it out. And we'll check out the portfolios, and let's do it. Not an investment advisor, not investment advice. Let's just get right into it. Let's get right into it. We do the bigger spiel on the other show, but we'll just get right into it. Let's check out the portfolios. As you know, we went through all the cash-paying securities in the world and came away with the 142 best dividend-paying, cash-paying securities in the world. We've got the master list by sector, so you can go through communication services, communication cyclical. Got the master list by type. So common stock, all the common stocks listed alphabetically, and then all the international stocks listed alphabetically, then all the preferreds listed alphabetically, then all closed-end funds alphabetically, then all the ETFs alphabetically, then all the bonds alphabetically. Good job, team. But then we have the four portfolios. The high yield portfolio is yielding 9.45%. That is a high-yielding portfolio indeed. Sleep Well portfolio is yielding 5.69 portfolio. That's a better snap. Dividend portfolio is yielding 3.42%, and the global 4.71%. Pretty good stuff. Let's get into this. Here's employers real quick. This is just our favorite financial. This is workers' compensation insurance, which is a pick of ours for small cap. Acadian Timber is a small cap pick for us as well as a dividend. EIG is a small cap as well as a dividend. EIG is at an all-time high. This is the second special dividend of the year. This is a workers' compensation, so suing people, being litigious and having to take those considerations, having to have that coverage is probably going to be a secular trend with a tailwind, right? I have a secular tailwind to it. Seems like things are going well. The CEO is an actuary, which is extremely impressive. The people that set rates for insurance companies have so much money on the line. So much money on the line. If they get it wrong, it's bad news. If they get it right, you make a lot of money. And it's extremely difficult to make it through actuarial school. Anyway, Catherine Antonello is an actuary. And today they announced a $1.25 special dividend. So again, that happened a few days ago. But anyway, second one of the year. What you should do with property and casualty insurance stocks is you should pay a small dividend like they do, like 2.5%, 2.5%. And then it's variable though in property and casualty. It's so hard to say when your claims are going to come. So you should have a cash buffer, and then when you have more money to pay out, eventually you'll accumulate enough to pay out special dividends. So pay a low-level regular dividend and then pay out special dividends is what you should do. And watch out for companies that try to entice you in by paying out a high regular dividend. So they do it right there at EIG. Anyway, let's get into Acadian. Acadian has a yield of 7.65%, super high yield. Way to go, Acadian. Market cap of only 184 million. Here is my write-up on Acadian. This is Acadian Timber, ACAZF. Acadian is one of the largest timberland owners and managers in northeastern North America. It owns about 1.1 million acres of timberland in New Brunswick and Maine, and manages another 1.3 million in New Brunswick. So it owns 1.1 million in New Brunswick and in Maine. That's Canada and Maine. And then it manages 1.3 million in New Brunswick. You can see the chart there, the map action. Okay, so 300,000 acres of Maine timberlands, 761,000 of New Brunswick timberlands, and then it manages in New Brunswick as well. Acadian's trees largely become saw logs for traditional lumber uses like house framing. But as CEO Adam Shaparsky puts it, we are making sure that we're achieving as much as we can out of the tree. The pulp gets used for paper, and the organic matter is used for biomass fuel. All right, so the biomass fuel, this is the stuff you couldn't make saw logs out of, just all the little stuff that gets used for biomass, okie dokie. Pulp wood, suitable for making pulp and producing paper, okay. And then as you get to the bottom, the thick stuff, you get saw logs, a felled tree trunk suitable for cutting into lumber and other specialty products, okie dokie. That's 62% of their sales. So 62% of that is the saw logs, 32% is the pulpwood, and just 6% is the biomass. Softwood saw logs make up about half of the business mix, but they have hardwood lumber and specialty products, various paper products, pulp, fuel, and engineered wood products as well. Biomass is used for fuel. There's the worst type of fuel as far as environmental stuff. All right, and then how is the company doing lately? So with mortgage rates, we know that timber prices were going out of control, but then things went sharply the other way. So how's the company doing lately with mortgage rates? CEO Adam Shaparsky on the Q3 call, with interest rates rising as well as housing sales and price growth slowing, consensus forecast has been lowered to approximately 1.55 million U.S. housing starts in 2022 and 1.4 million in 2023 as compared to 1.6 million in 2021. These estimates, however, are still above historical levels. So even though they're down, they're still above historical levels. That's good news. Accordingly, we remain confident that the stability of the Northeast forestry sector combined with the long-term demand for new homes and repair and remodel activity will support the demand for pricing of our products. We're likely to decelerate. Inflation is expected to remain a challenge in the near term and to continue to exert pressure on our financial results through the increased contract rates and fuel charges that we pay our contractors. However, the recovery of the incremental costs from our contractors beginning in the second quarter is expected to continue to mitigate some of this impact, and the team continues to work with our customers to ensure we pass through these costs increase as quickly as possible. Although softwood lumber pricing has decreased from its historic levels, demand for softwood sawlogs remains stable in the regions where Acadian operates, and therefore strong pricing is expected through the remainder of the year. So this stock is off a lot. I don't know if it's off a lot, but it's down from its highs. And looking back historically, it never gives you much of an entry point, and it always gives you a high yield. And it's got those assets to rely on as far as a margin of safety. And then there is the catalyst, the kicker, the carbon credits. And finally, there is the carbon kicker. Reforestation carbon offset projects are a possible long-term tailwind that could bolster timber prices by reducing lumber supply and or providing income for a long time. So they'll pay Acadia not to cut their trees down. And so either it could boost timber prices by reducing lumber supply, or provide income for a long time. Great. So they win both ways. They get money, and then plus what they do sell is more expensive now. This is early innings, but the company is expecting a carbon income in 2022 per Mr. Shaparsky. So I think this is what he just said beginning of November. Finally, the work to develop the forest carbon credit inventory has continued, and the initial model for the project has been completed. As we disclosed in September, 1.6 million credits have been estimated on a preliminary basis over a 10-year reporting period. The 713,000 of these credits are expected to be registered on the American Carbon Registry in the fourth quarter, so it's this quarter. Preliminary credit volumes have been submitted to third-party verifiers who are auditing the model. Accordingly, the final issued volumes could vary from the estimates presented. The impact to Acadian's financial results is subject to the successful marketing of these credits and to the timing and prices obtained from contracts negotiated with third parties, which are not yet in place. However, there is the potential for sales to be realized immediately following successful registration, which, as I just mentioned, is expected in the fourth quarter. So they could announce a big sale of these carbon credits, like half of their carbon credits, this quarter. So how much? So they got 1.6 million total, like 700,000 this quarter. How much? What do they go for? So we didn't give guidance as far as values, he says, but I would answer the question the same way as in previous quarters. We're in the mid to high 20s. We understand the current rate for carbon credits right now. So I don't know if he's saying, if we look at the prices for carbon prices, tree planting, their average price, this says from last month, $7.50 per credit. And they're in the range of $2 to $20. So I don't know if he's saying, so if he's saying 20 per, that's quite a lot. I would think he was saying like 20 total, maybe. High 20s. So he's saying the total. He's saying the total. So yeah, there it looks like they can get, because I saw somewhere else it was getting over $2 a credit. So it looks like he's saying total on all their credits they can get 20 million into 20s of millions, I think. And their market cap is 180 million. So that I'm pretty sure that's what he was saying. Sorry, I don't have that. Anyway, that has been a big potential catalyst coming down the pike, and it looks like it could be happening in the fourth quarter, and it could be a big one. They haven't told us exactly what it's worth, but based on the carbon credit pricing by type here, tree planting, average price of $7.50. And what do they have? 713,000. Yeah, 713,000 this quarter. So it could be 5 million right there, with another with more than that coming again, and that could be annual. So, and then that is also the average price yeah. So and then the range of prices, it was going up above $20. So I don't, if he was saying $20 per share, then it's triple that. So I don't know. Frankly, I don't know. But let's look. It'll be a good kicker either way. Even if they didn't have that, the business is good. It's a cool business, and you can rely on the trees growing. All right, great to see you guys. We'll do it again next Tuesday at 2, and I'll see you in the Discord. Have a great night. See you in the Discord.